My name is Racha. I'm the co-founder of the Digital Digest. Joining me on the panel today is Yehia, Abouelwafa, the co-founder and CIO of DisrupTech Ventures. Ahmed, Tarek, which a lot of you have been taking selfies with him before I do, so I don't know if I need to introduce. He's an angel investor and a serial entrepreneur, and also probably quite famous angel investor out there. Angela Lee, the founder of 37 Angels, also joining us from New York today. So it's a really great panel to be on. And I hope we have a great, fruitful conversation this morning. I will start by giving the microphone to you to each introduce yourself for 1 minute and what does your fund do, or what's your investment focus. And I apologize to everyone, we will be running this in English since we have an English speaking panelist on the call. So we'll start with you, Yehia.
Hello? Yeah. I'll start with the lady first, so Angela, please go ahead.
Hello, everybody. My name is Angela Lee. I'm based in New York City. I'm actually a professor at Columbia Business School where I teach venture capital. I'm also the founder of 37 Angels. We're an angel network. We've invested in about 100 companies. Sector agnostic. I personally invest in digital health and future of work, more B2B than B2C. And we invest between $100,000 and $300,000 USD into a company, and we roughly invest in 10 companies per year. And then I'm also a venture partner at a fund called Fresco Capital that invests internationally, and we invest in digital health, future of work, and sustainability.
My name is Yehia Abouelwafa. I'm the co-founder and CIO of DisrupTech Ventures. It's a venture capital fund domiciled in the Netherlands with prime focus on the Egyptian market. So far, we started operations in September 2021. Up till this particular moment, we managed to do 20 portfolio companies. We managed to have 1 unicorn in our portfolio. We managed to do a successful exit in the Egyptian market in this condition. And we focus on early stage investment. Basically, we come in the company very early and we work with them closely, hands-on, the first 18 months until they reach Series A. Then ultimately we do exit by Series B. And we like founders who are resilient, who are passionate, looking forward to solve real problem, and enable an untech industry to be disrupted, hence the DisrupTech name.
Ahmed, we invest in healthcare, education, and startups.
Very broadly. And you also invest in not just tech, right?
كما جينا مش سامع صوتك من الإيكو.
Well, yes, there's a bit of an echo going on. You invest in tech and non-tech businesses as well.
Yes, we do invest in the tech business, non-tech business. We're not focusing on the tech business. Tech is an enabling business for most of our other business.
Okay, great. And if we look at whether tech or not, what are the sectors? I know there's a bit of a variety of what you're interested in. In the next 5 to 10 years, what do you think are the sectors that are really going to change, or you've invested in, and why do you think these are key sectors? Like, if you believe in a sector, what's the key factors that's making you interested in it? We can start with you, Ahmed, and then Neuron.
So we believe healthcare and education, different kind of healthcare and different education. Healthcare is a tech enabler, AI enabling AI in healthcare, which will reduce the cost and improve the quality of the healthcare. We also believe in education, not the conventional education, so we're from K-12 and also degrees, but we're enabling the entrepreneurial courses, AI courses in the education platform. And also we believe in the startups that to help and support all this ecosystem of healthcare and education. So for having our ecosystem, our own ecosystem, to support all of this mission.
Angela?
Yeah, on the future of work side, I'm personally very passionate about adult education and specifically upskilling. Most of us are going to have at least 5 careers in our life, and we're working longer and living longer. And so how do you keep getting educated, not just in university? And on the healthcare side, we're really focused on personalized healthcare, patient-driven healthcare, and we're also quite focused on cost transparency. Healthcare costs are rising all over the world, and the more that employers and patients can know about healthcare costs, the better.
For us, we focus more on fintech and fintech enabled because we believe that fintech is an enabler to most industries. So, for instance, we have fintech adjacents, a company like Moderators, which is an agri-tech, for instance, but the fintech aspect and angle of it enables model contract farming work better. And we see, actually we saw an edge in this, given our background and expertise as partners. So we wanted to occupy this area in fintech, taking into consideration that the amount of people who are underbanked are very high in Egypt, without touching base on the numbers. So there was great potential on this. Hence, how we balance our portfolio, we almost have 55% of our investments in fintech, because we see that this is the way forward in Egypt, because we are a local VC at the end of the day, in Egypt for the coming 5 to 8 years.
And I'm going to ask you more specific questions each. So Angela, you mentioned cost transparency. Is this more related to insurance technology, or is it more on the healthcare side? Because obviously there's different components that come into play.
Both, right? So I would say certainly on the insurance perspective, helping an employer know and say, if you do X, it will reduce heart disease or mental stress for your employees, and that will help with retention. On the patient side, knowing what type of insurance plan to pick, but then also on the drug discovery side. So we do not invest in life science, but we invest in technology that enables and helps life science. And so, for example, knowing what patents exist to save on drug approval costs is something else that we're quite focused on.
And Yehia, when we talk about fintech, I mean, Egypt is definitely very prime for this. We have a massive underbanked, underserviced market. And if you're looking to create unicorns, how scalable are the Egyptian fintech startups outside of Egypt? How fast are they scaling outside of the country as well?
Well, this is an excellent question, honestly speaking, Racha. The very fact that companies think that they can go cross-border and do business. If someone comes to me and tell me, okay, you know what, I'm going to Saudi Arabia, I'm going to Oman, I'm going to somewhere here and there, right? I get very skeptical, right? It depends on what he built here already. Like, did he capture the whole market? Did he stop and consolidate what he has here before expanding? Because in many cases, some of the models cannot be expanded right? But they think they can do it, they can generate revenues of foreign currency and so forth.
Yeah, because it's a highly regulated market. It's a tough one to crack.
It is highly regulated anyway. However, there were too many initiatives that took place in the past 3-4 years, right? And what we see is we see a great will from the current Egyptian administrator to make this happen. And hence this conference, other conferences taking place. Egypt is becoming more of a hub at the moment as we speak. The number of startups, if you compare it to what was taking place 3-4 years back, no, it's getting substantial. Not only in fintech, you see education technology,
yes,
healthcare, and so on and so forth, even AI, and looking forward for the future. So there is great potential, as we see, because there is a will. We understand, at the end of the day, it's yes, bureaucratic, yes, takes time, That's part of the transformation. But that's change. And we're here to make a change, right?
Ahmed, in the sectors of focus for you, and also as an angel investor, you're looking at you're seeing countless companies on a regular basis, right? What kinds of businesses are you not seeing enough of? Are you look at all the startups that approach you on a regular basis, and you're saying, you know what, I wish I would see more of this, I wish I would see more of that. Are you not seeing enough AI startup? What startups do you wish you were seeing more of?
To be honest, I've seen probably a lot of everything. But the main thing that I'm seeing, that they start with the tech, which I'm not a big fan of. So they did not validate their model before having the tech. So the trend of starting with the tech and then going to the model, the main model, the core model, is not there. Second, most of the entrepreneurs and the startup, they do not have a 360 degree, so they understand either technical. They will have, inshallah, but they do not have the 360 degree. How to do the corporate, how to do governance in the future, what is the business plan, how to do the numbers game, which this is what our aim to help them and so on.
So you see a lot of technical enthusiasm, but not a lot of business acumen or maturity.
Yeah, I see that everyone is trying to ride the wave of the tech. The VC, I believe that spoiled them a lot. With a lot of money, spoiled them. And I don't think that this is sustainable. It has to be at certain point, they understand that they have to go into the core of the business, understand more the competitive edge that they have, because it's not always pure tech.
That makes sense. And do you see this more in this challenge across all the sectors, or more sectors than others?
More or less across all sectors, I would say, more or less across all sectors.
So if you want to pitch to Ahmed, work on your business a little bit better before you come and take selfies.
I don't really believe that it's a certain sector coming and riding the wave for the coming 5-10 years, or riding the wave in the coming 20 years. I believe that every business, if it's differentiated in a different way, it will succeed. They just need to speak business. They need to speak the language of business. They need to understand the 360 degree. They need to understand the 6-7 pillars, verticals of the business to succeed. I always say a tech company, an AI big company, or a big education platform can be as successful as محل فول وطعمية. Both. Depends on how you tweak it, how you differentiate yourself.
And the محل الفول وطعمية is basically the food truck on the corner, which are quite successful in lots of places. And I'd carry that question to you, Angela, which are there certain sectors you're interested in and you feel you're not seeing really quality or enthusiasm in?
I think that the boring sectors are the ones that I would love to see more ideas in. I see, we look at 2,000 startups a year, and I can't tell you how many travel apps or shopping apps, that kind of stuff. But one area we're really interested in is supply chain management. We have 2 very successful companies in our portfolio helping with supply chain, which is something we obviously all felt during COVID and during some recent events. And so people who are tackling really boring problems around shipping, logistics, is something we're quite interested in.
The boring problems are always where the money is, but they're very boring. That's where the money is. Yehia? Same, you're very focused on fintech. That's a very big sector. Are there certain subsectors within fintech that you feel not a lot of startups? Because we've seen a lot of startups in certain verticals because they got a lot of funding. We're not going to call them out. Are there certain, or even just technology investments that you're not seeing?
Well, the good thing about fintech is it's an internal path. Most ventures that's how we find the embedded finance angle of it, or the enabler angle of it. However, we're very much interested in InsurTech at the moment. There are some really promising companies launched in Egypt in the past couple of years. We invested in a couple of them. And deep tech, AI technology, we invested in one as well. And we see the great potential in that one. One more thing is blockchain, which is an untapped sector that we have been studying almost for the past couple of years, innocently, research reports, meeting companies, screening companies, and we think there will be a very good move taking place in Egypt in the coming couple of years, capitalizing on the momentum that was created a couple of years back.
If you want blockchain startups, you just come to Dubai. There's just only blockchain startups.
Definitely, indeed.
And I agree with InsurTech. It's interesting that this is one of, I believe in the past 7 or 6 years, raised less than $40 million. So it's very tiny. I'm not sure what insurance technology penetration is, and the only market that actually publishes those numbers is Saudi, and it's still very small. But we're seeing the first InsurTech IPO this week, so in the region.
Sorry, I didn't hear the last one.
InsurTech IPO, the first one in the region, is happening this week.
So for some reason, I cannot hear you very well. Ah, yeah.
So that maybe will improve the startup chances. Don't get excited.
That's, I think, having a company for an early stage small bank like us, going for an IPO one day is a dream. So this is something we all aspire to have. And the good thing is people see models like the Saudi company, and they believe that they can get there, right? And again, insurance is one of the most complicated and regulated sectors in Egypt. And that's why many startups tried to tap into that market with technology, so on and so forth, but it didn't work out the way they thought it would be, right? So I think it's a process, and it will take place slowly and cautiously, because insurance, the regulations are challenging. And Ahmed is an insurance. You know about insurance over there?
Probably don't know, but
No.
no, I'm not into insurance. I'm oil and gas, ex-oil and gas.
So today, if we want to give people an idea of, Ahmed, you mentioned a lot about the business acumen, and I'm sure hundreds if not thousands of startups reach out to you on a regular basis. What is the best way?
The entrepreneur has to speak numbers. If he does not master the numbers language, it turns you off. So if they speak the numbers language, then I hear very well in any business. Number 2 is being skilled in the game, to have his skin in the game big time, not just to have a part-time job or saying, okay, I'm gonna take this salary. So we're not investing to fund their luxury life. I believe these two, and then the business model, everything else we can help, we can support.
Lots of numbers and no part-time jobs. Absolutely fair. Angela?
Yeah, so we have a 4P framework of what we look at: people, problem, progress, and price. People, we want the team to make sense, have domain expertise in what they're doing, and also skin in the game. Problem, we're looking for a very large market size and an attractive competitive landscape. Progress, obviously some degree of progress, and then price. The deal terms have to be fair. Those are the 4 things that we look at.
Okay.
Of course, knowing the numbers is one thing. How good the team is key for execution. Because sometimes you have a founder who hires some team members for a short game, but he's doubling down on his losses in the coming couple of years. We do this mistake because we think if we hire shiny people with high salaries, they will be able to get the funding, right? Sometimes they do, but they don't have cash. They cannot afford these talents, they go to work. So again, years and the integration of the team is key, especially for an early stage investor like us, right? It might be different when you reach Series A, hire a qualified CEO, because the guy who can take it from 0 to 20, 25 million, not necessarily the same guy who will take it from 25 to 125. Of course. And we've seen horror stories about this. So again, team, yes, knowing about the numbers, the business plan, the hidden costs they face once they start execution, and again, not executing very fast, very quickly. Because stop and consolidate, look at the market, know exactly, have a pilot view, know exactly what's happening. Because sometimes, if you chew more than you can digest, you end up with big failure very quickly.
And we've seen a lot of examples of this. We've seen lots of examples of startups that geographically expand far too fast and downsize, and then try again. And eventually realize it's not easy to geographically expand very easily. It's not that simple. If we want to look at a different angle of this, today each of you has a very different type of investment strategy and approach to startups, whether from an international perspective or local perspective. Founders routinely have kind of mixed feedback on how much involved their investors should be in their business. And it's a preference, obviously. Not all businesses are the same. Not all founders are the same. How do you see your support services for this, or support generally for startups? And when do you interfere more and when do you not interfere? Do you want to start, Angela?
Yeah, so I think as an investor, it's really important to know what you're good at and what you're not good at, and then to communicate that to the founders. And I would encourage all of you, as you're thinking about taking...
There is a problem with that. I don't think that anyone is hearing anything. There's an echo big time. They're hearing. So it's us over there.
We can't hear each other.
And you can't hear me? Okay, I'm pushing the mic away so we can hear. Okay.
I would say that it's really important for you to diligence your investors as well. So talk to their existing portfolio companies and ask them, are they helpful? You know, are they really able to open doors? Are they nice to work with? All those things. But for us, the two things that we help with the most are introductions, both to hires, customers, acquirers, fundraising. And then the second thing is we help a lot with PR. We just happen to have relationships with a lot of newspapers and journalists. And so those are the two things that we help with the most, introductions and PR. But I think every firm is different. And just make sure that you diligence your investors just like we're diligence of you.
Yeah, so startups have to find out how that, like, what they can ask these VCs or ask. Ahmed, and the question is, how do different founders prefer the investor to be involved or not involved to a certain degree? How involved are you with the team, with the startups you invest in? And how do you decide how to get more involved or not?
I'm so involved. So in every single investment that we do, I'm so involved. It's a passion. And I stop being involved when I can delegate. So. Yeah, so we carve out every project that is already sustainable and they can manage by themselves. Once we fill the gap, and once the proper team is in place, and once they're on the right track. And we do this through measurement, proper KPIs and measurement. So make them learn how to measure their performance. When they are able to learn their performance, we step back and we let them lead the game. But we're not angel investors. So we have probably, I believe, 40, 50 startups now. We're incubating, we're involved day to day on what's going on.
So you're very hands-on.
We're so involved. It's our passion. Me and my team and myself.
Okay, amazing. Yehia?
Yeah. The most important thing I think is when a startup comes and pitch to a VC, they have to know that they are speaking to an institutional investor. That entails requirements in terms of compliance, KYC, a lot of details, involvement, contractual agreements that are solid, that they know exactly what they're getting themselves into, right? It's not like family and friends or angel investors. It's more of an institutionalized investment. So we have to be prepared for this. We have to understand exactly what they are signing off on. A reporting requirement is a reporting requirement. A deadline is a deadline, right? There will be penalties, repercussions, so on and so forth. And the thing is that once you want to go and play this game with VCs, right? You have to know that you need to lay the foundation for future investors. Like now, you're dealing with a fund with our size. Later on, you'll be dealing with regional and national funds that comes with bigger tickets. Later on, when you are a stable company and growing very well, you will deal with private equities. You will dig deep to the bone. So the foundation is really strong. And they have to know exactly what they're getting themselves into, right? And they have to speak the language and be tolerant. Because when a VC asks for a right, they just want to make the company more successful. And they want to make money. And that the process, they make money as well.
Perfect. And I think this is something quite common, that a lot of founders don't have their data rooms ready, don't have their data all ready for the VCs or the potential angel investors to look at. And even if the numbers are not great, any numbers are better than no numbers, right? At least you show you understand what you're looking at. I'm mindful of our time, so last question, and I'm going to ask you to give advice to founders that are approaching investors. If there's one thing you advise them to take into consideration, and from your experience, what would it be?
Yeah, I think one thing we haven't talked about yet today is really understanding your customer. The more that you understand the problems that they're facing, their workflow, how difficult is it to change over your software or service, just the more you understand your customer, the better. I think that if you haven't deeply worked in the industry, go out and do 100 customer interviews. And the more you understand the customer, the better product you'll build. But also investors will believe that you then know how to really penetrate the market.
Spend more time talking to your customers. What advice to startups?
Be able to say no. No should be an option. So do your project and make sure that your project and your model is sustainable without any investment. And use the investment only to grow and scale. But have no as an option. So you are in a much better seat of negotiation. And if anything bad happens in the future, you're going to be able to continue. Sorry, I didn't know that you're VC, but the issue with the success rate of the VC, I don't want to say it now, because I know the right number. Even the published number are not the right number. I've seen this on the ground. But what we're trying to do is incubating, accelerating. They do not have to be unicorns, but we do not accept any single project of our projects to be not successful or to grow. At least to be sustainable and to continue being cash flow positive. And this is key. Because when money becomes expensive, it's going to be a big issue for people who are spoiled with the money left, right, and center. So do not depend on investors. The investor, use them to build a bigger ecosystem for you, to cross-sell, upsell, to upscale, to go to different jurisdictions. But do not depend on them. Have no as an option. Or it will come one point in time, and I've seen this a lot. You're going to be diluted to death. And you're going to be the one founder, and you're going to be diluted to death. There's other round, another round, another round. Even if you create huge value, you're going to be just the name. You own the name, but you do not own enough equity for your efforts.
I think definitely this is different investment theses and trajectories, and I think the most important thing is for founders is to weigh the pros and cons of every journey before they go on it, right? If they decide not to take venture capital money, then that's one journey, that's 100% valid. And if they decide to take venture capital, they have to understand exactly, as you said, the risk that they're taking.
No, sorry, I didn't say that he doesn't take the venture capital money. He has to take every single thing that he can take. But he has to sit on a very solid chair negotiating with every investor, every VC. So he has to negotiate very well. So he has to be sustainable by himself. And he has to believe in his model that is sustainable. So no is an option. Okay?
To have better negotiation by having more money. And
yes,
more
sustainable model by himself.
Yehia?
2 words. Laser focus. Focus, 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 and focus. Right? Do one task at a time. You're raising one task at a time. You're building your product one task at a time. You're building your team one task at a time. Focus until you accomplish a specific task and move to the next. That's how you accomplish, you're efficient and effective. Meeting your goals effectively and in the shortest span of time. So be focused. That's the advice. The worst thing, because you're doing too many things, everything is shredded, and you lose focus. So focus, then focus, then focus.
Thank you so much. Thank you for my wonderful panelists, and thank you all for being with us. Thank you.